Not confirm. Okay.
Yeah, that's what. So I'm just trying to start the recording. Yeah. Okay.
Yeah, yeah.
You are
Okay.
able to see my desktop, right?
Yes, yes, yes.
Okay. So what I will do is I will just
Okay.
take you through this new creation. Uh, okay. So before we proceed, if people in their noisy background can mute themselves, then it would enhance the quality of the recording. Okay. And yes. So we'll get started. So the first thing was what we did was let's just recap what we did. We created responsibilities, we attached them to our user, then we logged in as a new user. Then the second was creation of business group. This business group was done in HRMS, and there were mandatory flex fields which have to be attached. Okay, so there are 4 HRMS flex fields and 2 costing, 2 payroll flex fields, which we attach to this particular business group, so that this business group assumes the characteristics of business group. Now next is we created the functional or financial responsibilities which will be used for our day-to-day operations. We created payables, GL and receivables. Now the next step is to set the profile option. This is done by the system administrator. What the system administrator does is he secures the business group information. So once a business group is created, he secures this BG information using these 3 profile options. So we went to these 3 profile options and we set it as our business group. Now next is we created an employee. Actually this is a draft note. The one I sent you has screenshots. Okay, so don't worry, when I send you the final notes, it will have the screenshots with it. Okay, sure, Afsar. Okay. So next is we created an employee and we associated this employee with an user. Okay. So that is what we did. Now after that, we went to our GL, and in our GL we created a legal entity, and then we created a ledger, and we associated both the legal entity and ledger in our accounting setup manager. Now while creating a legal entity and associating it to a ledger, let me just show it. This is very important. We'll be dwelling a deep on this today. Okay. Let me close. Are you able to see my application here? So, hello, is everyone able to see this? Afsar?
Hi Satya, yeah, I'm able to see this.
Okay, fine. So what we were doing is we went to general ledger, and in our general ledger responsibility, we went to set up financials, accounting setup manager, accounting setup.
Satya, please start the recording.
Yeah,
Satya.
recording has started already.
Oh, okay, thank you.
Okay, and here what we did is we create a legal entity first, and then we created an accounting setup for this legal entity. Then if you go to update accounting options, we can find in update accounting options, we can find a lot of options here. So what we did is first we created the finish the journal processing options, wherein we mentioned the retained earnings account, and if you go to update here, you can find the 4 C's being mapped. Do you remember we gave the 4 C's for completion of a ledger? You can find the calendar, you can find the currency, you can find the chart of accounts, and here you can find the slab. That is nothing but the convention. So after this, we came here and we created operating unit. Okay, if you go to update here, I can find one OU already created. Okay, Satya OU1, and this OU was mapped to a business group and to a legal entity. So after doing this, what we did is we went to HRMS responsibility, and in HRMS responsibility went to work structure organization description. Here I queried for my OU, okay, and I clicked on find. The OU got populated. I came to this organization unit and I clicked on others, and I verified whether the operating unit information has the ledger and the legal entity mapped with it. This is what we did in the previous session. We saw this was mapped, we clicked on OK, OK. Then we came to the inventory organization, clicked on others. I came to the accounting information. Okay, this nothing is entered here. Okay, let me enter. This is the ledger legal entity and the operating unit. I click on OK. Okay. You want to save the changes? Yes. Now, other thing left over is you remember we did all these things, but that was for Sandeep Puyi, that was another machine. So I have repeated that here. Now I come to the inventory information. And this is a pretty big setup here. See, you will have to enter all this in the inventory information. In inventory information, you have to enter all this information. Okay, let's see. These are all job of an inventory consultant. So you will be entering all the, we will be mentioning what are the costing method, whether it is standard costing or FIFO or LIFO, whatever based on their costing methodologies, how the inventory will be valued. Then you will mention a material account. One 410. Next, I will go to revision lot or serial. Starting revision number is 1. Let's say starting serial number is 1. Prefix I want is Satya. Now I will go to ATP pick an item. I will just enter the mandatory information so that I can proceed with my new org setup. In other accounts, there are a lot of mandatory accounts to be entered. Let's take purchase price variance. You have all the information here. Okay, we are in the other accounts tab, correct? So 5210. Now let me save. While saving, it will throw me a message. The organization costing method cannot be changed. So I click on OK. And it gets saved. Here, if I want, I can go to. Again, I will save it. Okay. So we are done with our inventory information. Next is to create an HR organization. This is just a dummy organization we'll create here. I'll place my cursor here. I'll say HR organization. I will enable this one and I will go to others. Okay, let me see, Control S. Costing information. Tab out. No department. Do you want to say yes? Control S. So now, next step after doing all this thing, for our, you remember we discussed something regarding the security profile in HRMS, whereby we give access to different operating units for a user, correct? So how is that done? That is done using security profile. So first is we'll create a security profile. I'll close this one. I'll scroll down. I have security profile. Okay. See, all the navigations are in the spreadsheet. I'll send it across. Okay. Now let me create Satya new sec PRF. Now this security profile is for a BG. So that is Satya BG. Now here I will select secure organizations by organization hierarchy and I will secure my operating unit. Okay. What is that operating unit? Satya OU1. I have only one OU within this one. I don't have anything else. If I have more than one OUs, then I will go on adding lines and I will be saving it here. Okay. So now I will save it. Okay. So we created a security profile and we have saved it. Now what is that we have done? We have just associated a OU and a BG and we have created a security profile. Now in order for the security profile to get effect, to get a life, we'll have to run a request, view request, submit a new request. Okay. What will be the name? It will be security list maintenance. See, you'll have to practice all this at least 4 times. Only then you will understand. See, I can show you the navigation, I can give you the worksheet, everything. But unless you practice, you will not understand. One named security. Because these are all out of our domain. These are all in HRMS and system admin. So it will be slightly confusing. Because that is where a new org is created. Now, if it is all HRMS and system administrator thing, then why are we discussing a financial course? The reason why we are discussing is what I said in the initial day, because ERP has to be viewed in whole, in entirety, and not in pieces. So once you know this, your perspective will change. You will look at things from a top-down perspective rather than from a single OU transaction perspective. So security profile will be, I'll click on OK, submit. Do you want to submit a new request? No. Click on find. Any doubts so far? Anyone? Afsar, Ajay, Jana, Mahen?
Yeah, it's fine.
Like this is all what we did in our previous class in the yesterday. Afsar, are you clear?
Yeah, Satya, that's fine. Thank you.
Okay. Now, this security profile, you remember what we did? We assigned it to the responsibility, correct? I'll close this one. Now from HRMS, I will shift over to system administrator. I'll go to the profile systems. In here, human resource. I'll take my responsibility. Then new. I take MO security. Here, I will associate my security profile. What is that? Control S. Okay. This is what we will have to associate that security profile to the responsibility. Similarly, I will be associating it with my GL responsibility and other responsibilities. Click on find. Here again, save. So you should go on adding it to the other responsibilities to AP, AR. These are all like AP. It's already added. Okay, save. Now, once we are done with creating a security profile, giving access to the OUs within a BG to a user, this is what we did. MO security profile. Okay. Now next is to default an operating unit. So what we will do? Let me go. There is one other profile option which the system administrator will check. It is default operating unit. Satya OU1. So from that security profile, I am trying to default this operating unit for the responsibility. So I will save it. MO default operating unit is the one. Then MO security profile is the one here. Next one is GL data access set. We'll discuss regarding what GL data access set is in detail when we come to general ledger, but currently understand we are giving access to a general ledger data using this profile option. So what we'll do is I'll go to Windows, profile options. This is okay, let me cancel profile systems. Application for this would be general ledger. Responsibility Satya GL. See, everything is there in the worksheet. You can refer that and use this Satya new. See, for this general ledger, I am giving responsibility. I am giving access to my primary ledger that we created in Accounting Setup Manager. Okay. For one GL, I am giving access to a PL that we created in Accounting Setup Manager, and I will save it. Any doubts?
Satya, could you please repeat this one?
See, what we are trying to do is, see, we created a GL responsibility, correct? Initially.
Yeah.
And using this GL responsibility is what we created the primary ledger, correct?
Yeah.
So using the same GL responsibility, I can create n number of primary ledgers. Agreed?
Yes.
It is all, if you add 4 C's, it will become a PL, correct?
Yeah.
So
That's correct, yeah.
using this GL, I can add any number of 4 C's and I can create as many primary ledgers as possible.
Okay.
So now I am restricting the access to one primary ledger because this is the primary ledger for my operating unit.
Okay.
Okay. So that is what we are doing here. Using this profile option, the system administrator, he restricts the access to a primary ledger. Okay.
Okay, fine. Thanks.
Now after this, the next what is the next option? GL data access sequential numbering is not used. Okay, leave it. Now we'll have to run. This is very, very important. This request has to be run. This has to be run per operating unit. See, if you have if you create 4, see, so far what we did, we created one operating unit. Let's say similarly, if you have created 4 operating units, then you will have to do all the setups 4 times. What do I mean by all the setups? You'll have to create 4 inventory orgs, 4 HR orgs, then you'll have to do 4 times these profile options. Okay. Now, and for each operating unit, you'll have to run this replicate seed data. Now, what is replicate seed data? It's like this. See, we are in system administrator. Okay. After having set all this, I'll go to view request. So system administrator will run a request. It is called as replicate seed data. Okay. Now it will ask me for which operating unit I want to run it. I'll say Satya OU1. Okay. Click on submit. Do you want to submit a new request? No. I'll go find. Here I will keep refreshing my replicated seed data. This request, what it will do is, it will check for all the validations in the setups we have done so far, and if all the validations that we have done in the setups are correct, then this request will end successfully, or else it will error out. It's a pretty big request, so it will take a lot of time. You will have to keep refreshing it. By the way, any doubts so far? Once this request is done, then your new org is completed. Yes, it has got completed normally. Now I'll close this one. Now what is the next step after this request getting completed normally? Now the new org has got completed. Now for us, we will have to, in any organizations, to go ahead and start operations, you will have to open the periods. Okay, so I'll go to general ledger. Okay, I'll go to setup. Here there is open close. For my ledger, okay, this is for my ledger. I will click on find. It will tell me December 95. This is the period that we have mentioned in the accounting setup manager. While creating a ledger, we entered 4 C's: currency, calendar, chart of accounts, and convention. That calendar what we entered, right? So that starts from December 95. So I'll click on open. Do you want to open the first period? Yes. It will throw a request. Okay. Let me go to view, request, find. I should refresh this request so that the periods get opened. Just 1 second, hold on, I'll be back, okay? Just hang on for a second. Okay, sorry for that. Let's see what is the status. Okay, yeah. So this refresh has got completed normally. Now let us go and check it up. We are in general ledger, setup, open and close. Any find. I find December 95 is open. Okay. This is accounting month. So 1 month period. Okay. So December 95 is open. Now if I want, if I can click open next year and open the subsequent year. Do you want to open the next income registry? Yes. Request is this one. Let me go view, request, find. So it will open the next year. So this is what about. So once the periods are open, then as good as your org is effective. Any doubts so far regarding new org creation? So do you now get a high level idea of how things are linked at a very high level? The BG, the LE, the ledger, the operating unit, how they are created in HRMS, how inventory org is associated to operating unit, how the HR org is also associated. So are you getting an idea about this? Are you getting hang of it, everyone? What about Afsar, Ajay, Jana, Mahe?
Yeah, we got it.
Okay, but you'll have to practice this. At least you'll have to practice 3 or 4 times to get the concepts right. Okay. So this is all big requests, so it will take a lot of time. So oh, see. Okay. So if you have any doubts, you can ask me, or else we can proceed on to general ledger. This is still running. Can we proceed on to general ledger, everyone? After any doubts?
Satya,
Yeah.
I have to go through again. Maybe
Yeah, that is
next section, maybe next session, I may have doubt.
Yes. I will send you the notes with the screenshot. See, it is not possible by what to say to understand it in one go. You will have to try it twice or thrice to understand, because see, the most important problem that we have is it is not in our domain. Correct? So that is the one biggest problem we have. But still, if you do it twice or thrice, it is very easy to understand it. Okay?
Satya, one more thing is I have not received recording of yesterday's session.
Yeah, yesterday's session I didn't send across. I will send it today. But yesterday's session was mostly a repetition of the earlier session, right? But in any case, I will upload it today and send it across. Okay?
Okay, thank you.
Okay, fine. So let's proceed to general ledger. So we'll have an in-depth analysis of what general ledger is. So far, what we have been doing is we have been going to the accounting setup manager, and we have been. Oh man, this is running slow. It will just slow down my system. Close. So far what we have been doing is we have been going to the accounting setup manager, and we created a primary ledger for the legal entity, correct? So that is what we did. But we'll now look at a few in-depth discussion on general ledger. So what is general ledger? Basically, general ledger is the financial solution for your Oracle apps. Okay, from GL you derive the final statements of accounts, and these final statements of accounts are what used by management for their analysis and decision making. So that is what GL is all about. Now the role of GL has changed from 11i to R12. Now what do I mean by changed? It is like this. See, 11i and R12. Okay. Now in 11i, what was the case? In 11i, GL owned the following. See, this both are with respect to general ledger. Okay. GL was responsible for accounting and reporting. Okay. This is what GL's responsibility was. So it took care of the accounting entry and reporting. By reporting, I mean preparation of the balance sheet, profit and loss account, and the final statements of accounts. Now, in release 12, this role has changed. It no longer takes care of the accounting. Okay, accounting has done away with, because accounting in release 12 is taken care by something called as a subledger accounting. They have a new service called as SLA, which is centralized accounting engine, which we'll be looking later in our discussion in our classes. So SLA has taken over subledger accounting. So to that extent, the role of GL has been reduced in release 12. But reporting is same. You can't do away with GL if you want to report. Okay, reporting is always is retained, and GL now accounting has been reduced, and they have added another function heavy setup that is called as accounting setup manager. So what is accounting setup manager? Now GL has been made responsible for, or made responsible and has been made a central one-stop point for all your accounting setups. Now, accounting setups include setups of your legal entity and operating unit. Okay, so if you want to create an LE or an OU, you can do it through Accounting Setup Manager. In 11i, LE, OU were created using HRMS. So this is the change. Okay, in 11i, LE, OU were created in HRMS, and in release 12, it is being done using Accounting Setup Manager in General Ledger. So GL's role to that extent has increased in release 12 when compared to 11i, wherein things were handled in HRMS. Okay, now there are certain other activities that GL takes care. Now, in 11i, there was a concept of set of books. In R12, it has been replaced by ledger. Now, what set of books are, what ledgers are, we'll see in our discussion now. But before we proceed further, so far regarding this role of GL, 11i vis-a-vis R12, are you clear or do you have any doubts?
Satya,
Yeah.
in R12, the accounting setup manager, it creates LE and OU. Okay,
Yes.
whereas in
11i, it was handled by HRMS.
Okay, accounting setup manager is nothing but through system administrator, no?
No.
Responsibility?
It is through general ledger. You remember?
Generally.
So that's what you'll have to go through that Excel in detail to understand. See, let me open.
Okay.
Yeah. When I say accounting, always it is your GL. Okay. See, if I go here, if I take my general ledger responsibility, okay. If I scroll down, I have setup financials accounting setup manager. Okay. If I come here, this is my accounting setup manager. Got it?
Yeah.
Here is what we created legal entity. Remember?
Yes.
Okay. So that's what I mentioned here. So legal entity and operating units are created in accounting setup manager in release 12. In 11i, they were handled in HRMS.
Okay, fine.
Okay. Reporting part has been retained. Ultimately, if you want to draw, there is a separate functionally called as financial statement generator, which we'll look into it immediately when we complete the GL. Okay. But currently, I understand that GL integrates with financial statement generator, FSG, to generate the reports. Okay. Now, our topic of discussion, general ledger. Now, whenever we say general ledger, what comes to our mind? In release 12, it is ledger. In 11, it is set of books. Now, what is this whole fund about ledger and set of books? Now, it all depends on the C's of accounting. If you go to accounting setup manager, create accounting. See here, we had this, right? C's of accounting. For creating a ledger, we had chart of accounts, calendar, we have currency, and sub-ledger accounting method is nothing but convention. So we have 4 C's of accounting. So when 4 C's are culminated together, a ledger is created. Okay, we have COA, we have currency, we have calendar, and we have convention. Okay, when all these 4 C's are put together, we have a ledger. Now what about set of books? Set of books has only 3 C's, it did not have the 4th C. Okay, it did not have the convention. This was newly introduced in release 12. A new R12 entry. Convention is a new release 12 initiative. Just hold on for a minute, I'll give that. Yeah, we'll get started. Yeah, Mahen, like you'll have to mute yourself. Mahen?
Sorry.
Yeah,
Yes, sorry.
yeah, fine. Okay. Okay, fine. Now we were discussing regarding the 4 C's, right? So when these 4 C's put together, chart of accounts, currency, calendar, convention, we form a ledger. When these three C's are put together, we form set of books in 11I. So we no longer have the concept of set of books. We have only the concept of ledger. Now, one other thing that is imperative to note about the concept of set of books and ledger are, you can find it once again. I have a presentation for that. Here, if you see, okay, we'll come to the difference between what is set of book and ledger later. But first, we'll see what are the elements of now how accounting general ledger integrates with other products. What are the other products which integrate with general ledger? So basically, general ledger is the heart wherein you have inventory, payables, assets, all the accounting entries come and get deposited here. Okay. Now, this is an e-business suite integration across product modules. Okay. Now, let us go to the shared GL data. Now, what elements of general ledger are being shared by the other applications? In short, what are the components of general ledger which are being used by the other modules? We have a accounting structure. This is nothing but you can assume to be account codes. Okay, account codes are created in general ledger. Let's say 1000 is rent account, 1002 is the cash account, 1003 is salary account. So all these account codes are created in general ledger. We'll come to chart of accounts in a while discussion, but please understand account codes are created in general ledger, used elsewhere in other applications. Then we have currencies. Currencies are also defined in general ledger. Then you can create journal entries in general ledger. Okay. Then we have accounting calendar. Let's say it is a yearly calendar or a monthly calendar or a quarterly calendar. So these are the elements of general ledger which are being used by the other Oracle applications. Now, if you are able to, now this moment, let me make it as percentage. Okay. Now this is the 11i versus R12 distinction I was referring to. In 11i we had the concept of set of books, correct? Now the pain points were for each operating unit you had a set of book. Here, you see, this is the biggest pain point in 11i. So what happened is it was difficult to maintain each and every set of book, and you cannot perform operations across set of books. So if there are period closures, you want to close the period, you'll have to individually go and close for each and every set of book here. So you'll have to close for USA, then you'll have to close for Belgium, Austria, and then so you did not have a single convenient way of processing data across the set of books, and it was a very time consuming process. So to overcome this, what they did in release 12 is they brought in the concept of ledger. What is secondary ledger? What's the reporting currency? We'll see in short while, but please remember, see in R12 it is like this. See in 11i, let's say we had OU1 and we had OU2. Okay, so what was we had SOB1, so we will be having SOB2. Okay, since set of books are associated with operating units, but in this is in 11i scenario. Okay, now coming to a R12 scenario. In R12 we have a legal entity, and let's say within the legal entity, let's assume the same structure of OU1 and OU2. Okay, we have within this legal entity we have OU1 and OU2. Now what I do is I do not have separate books for each of these. Instead, at a legal entity level, I map a ledger. So when a ledger is mapped at this level, at a legal entity level, quite naturally it will percolate down to all the operating units within this legal entity. Let's say I have 60 operating units, then all the 60 operating units will have access to the same ledger. They need not every time go ahead and create set of books, or they need not wait for separate processing activities. All the activities are centralized and carried out through ledger. So one legal entity has ledger attached, and this ledger percolates down to the operating unit in release 12. Clear regarding this? Any doubts? 11i versus release 12 comparison. Jana, Mahen, Afsar, Dio. Any doubts? Hello?
Yeah, Satya, the ledger is directly attached to legal entity. Since
Yes.
the OU operating units comes under legal entity, it's common, like all the operating units have access to legal entity ledger.
Yes.
Ledger.
That is
Okay.
what you can see in this diagram. You have a legal entity, then you have a ledger. We'll come to see here we have three. Here it's an advanced version of a diagram wherein you have this is basically for a corporate presentation I did. So here you have a what to say you have a primary ledger, secondary ledger, reporting ledger. But in short, let's assume one ledger. Let's assume a single scenario now before we proceed further. Let's proceed step by step. You have a legal entity, you have a ledger, and within that you have different sub ledgers. Now what is a sub ledger and what is a primary ledger? So we have different terminologies coming to picture now. We have something called as a subledger. Okay. Then we have primary ledger. We have secondary ledger. We have reporting currency ledger. Nothing but it's reporting currency. So what are these things? See, subledger means what you have to understand is whenever transactions take place through AP or AR or FA or any of the modules, these modules are what referred to as subledgers. Okay. So from the subledger, the data will go to your main ledger, which is nothing but your primary ledger. Okay. That is how the data moves. Accounting data will go from your subledger. In short, it is nothing but if you go to a factory, you will have different big books. In one book, you will record all these supplier information. How much has been received from supplier, how many goods have been received, what are the payments. So that is nothing but payable subledger. Similarly, if you go to the sales department, they will have one other book. So this book will contain to whom the sales have been made and how much is recoverable from each and every customer. That is the receivable subledger. Similarly, if you go to fixed assets department, you will find what is the asset purchased and what is the balance paid. So these are called as the fixed assets subledger. Okay, so each of this book, right, they have configured as subledgers. So we need not worry about subledgers. We are not going to configure them. They are already seeded. They come with Oracle application. So our focus should only be on the primary ledger. But I want you to understand the flow of data. The data flows from subledger to the primary ledger. So it is like this. You have AP, AR, FA, other modules, right? So these are all subledgers. So from subledger, the data goes up to the primary ledger, which is associated with the legal entity. Got it? Clear? Afsar? Afsar? Are you clear?
Yeah.
Okay.
So it means that we directly don't insert data into ledger. We insert into subledger.
See, you should understand accounting is created for transactions. Now, where do we create transactions? We create transactions in invoice workbench, receivables workbench, correct? We create in payables, receivables, correct? You don't create it in ledger. You got
Yeah.
it? So,
Yeah.
these transactions have to be accounted. You got it?
Yeah.
And these transactions are created at OU level, operating unit level.
Yes, that's correct. Yes.
So, from the OU, you will have to account it and take it to the primary ledger, which is mapped to legal entity. Got it?
Okay, fine.
So it is data goes from top to bottom.
Okay, fine.
Okay. So you can also directly insert entries into this primary ledger. That is possible using GL, assuming in the year end you want to pass some adjustment entries. So we'll be looking at how we create journal entries later tomorrow in our session. But today is just a conceptual understanding session of general ledger. Okay. So now data goes from top to bottom. Now here we have certain other concepts. We have primary ledger, we have secondary ledger, we have reporting currency. If you see here, this is Satya PLC primary ledger. Okay. And here you have something called as a reporting currency. And here you have something called as a secondary ledger. Now to understand what a reporting currency is and what secondary ledger is, it is like this. I will give you a thumb rule first, then I will tell you the logic. Okay. So it depends whether you understand using the thumb rule, good, or whether you understand using the logic. Ultimately both are the same. Okay, ultimately your objective will be achieved. Okay, now the thumb rule is, see, you have a primary ledger which is nothing but the we'll have to understand the business scenario. Why? Let's say primary ledger. Okay, let's put it like this. It's a US company. Okay, US company, let's say Dell. Dell is a US company which is registered in United States of America. Now this Dell has a ledger. This Dell, a legal entity which is in United States, has a ledger which says, which has a currency. Okay, which has a, now this ledger will have 4 elements, right? Currency, calendar, it will have a chart of accounts, it will have a convention. Convention is nothing but slam. Convention with our slam. So only if these 4 elements are present, you can create a ledger, right? So quite naturally, you'll have a ledger. So now let us say the currency that it has is US dollar. The calendar which Dell has is from January to December. Now the chart of accounts, let's say it is having a US chart of account, which has 10,000 codes. Code number starting from code number 1 is rent, code number 10,000 ending in, say, let's outstanding expense or whatever it is. Okay, so they are following a US chart of accounts. Then convention means, see, whenever you want to account transactions, right, you will have to account it in accordance with the rules that the government prescribed. See, in US there is something called as US GAAP, in accordance with which accounting has to be carried out. In India you have Indian accounting standards. In France you have French reporting standards. Similarly, if you go to Norway, you have Norway standards. So it depends. For each and every country there are different standards based on which accounting has to be taken care. Okay. Now let's say it is in US, so I am following US GAAP. So these are the 4 C's for my US company which is situated in United States of America, which is Dell. Clear regarding this? Okay. Now I will want Dell. This is the head office and this is what I want to have as my 4C. So what Dell will do is, I will make this as a primary ledger. I will create a primary ledger in accounting setup manager. Here I will give the 4Cs. Okay, I will give US chart of accounts, January, December, calendar accounting, December, US dollar, and here I will give US GAAP. Okay, and I will create a primary ledger. Now let's go one step further. Dell has set up a branch office in India. This is Dell USA. Okay, and here I have set up a branch in India. So this is still Dell USA but Indian branch, that's all. This is not Dell India. Okay, this is Dell USA but Indian branch. So quite naturally, when I have a branch in India, the reason for me to have branch in India is because I am getting global, right? So in India I can't sell or buy for US dollar. I will have to only transact in INR. So my currency will be INR. And let's say I am following the same calendar from Jan to December, the same as my head office or legal entity. I am following the same chart of accounts, account 1000, 2000. I am not following a different chart of accounts. I am following the same gap. Okay, I am following the same accounting standard because this is still Dell USA. This is not Dell India. Okay, I am following the same gap. Now here you can see among the 4 C's, only currency is different. One of the C, that is currency, is different. So when one C, that is a currency, this only C is different, then I will create a reporting currency. In short, the thumb rule for reporting currency is, when the difference is, this is very important, only you should understand on account of currency. Okay, when the difference is, I will highlight this only word, it is very, very important. When difference is only on account of currency, then you will create a reporting currency merely to have another accounting representation to represent your transactions in the Indian currency. That's all. Okay. Clear regarding this reporting currency before we proceed to secondary ledger? Any doubts on this? Jana, Mahen? What about Afsar?
That's fine. That's fine.
Okay. Now, I'm expanding I'm just taking you a level above. Now here, let's say,
Yeah, I
yeah,
have one more question.
yeah,
When we are dealing with branch in India, Dell's branch in India,
correct.
which currency the transaction will pick? It will
Correct.
pick the reporting currency.
Quite naturally, see, when you're dealing in India and you're selling your laptop to the customer, you can't sell it for US dollar, right? You will only sell it, the invoice will be only in Indian currency, correct?
Yeah, that's correct. But
Uh,
the ledger, no, what do we have another ledger in India?
see,
Only one ledger. No, we said no. The ledger is only one at any level.
correct. So, see, what I'm trying to do is, see, I'm going to create only one ledger. So, from this ledger only, I will draw my balance sheet and profit loss account, okay?
Okay.
And what is this one? This is just another representation of my same ledger. Okay. Another representation or a mirror replica of the same ledger. In short, you can also call it as reporting currency ledger. Okay. This is just one other ledger, but this is specific to India. So what will happen? Let's say if there is a sale in India for 40,000 rupees. Okay. The same sale of 40,000 rupees will get converted into equivalent of US dollar and it will be represented as $1,000. That's all, $100. Got it?
Yeah.
So we are just mentioning a different currency for our Indian operations.
Okay. Okay. So my question is, if there is a secondary currency, reporting currency, then if the application will pick the reporting currency, no?
Transaction will always be entered in reporting currency because in India you can't enter in US dollar, correct?
Yes,
So,
that's correct. Yes.
So you will enter in reporting currency. It will automatically convert it to US dollar and post it in the primary ledger.
Okay. Okay. Fine. All right.
Okay.
All right. Okay. Thank you.
Now coming to I'm further expanding. See here, the difference was only on account of currency. Now let's say India is not that stringent. Okay, let's say Dell has opened a branch in Europe. Okay, it's opened a branch in Europe. And in Europe, the government is stringent. Since you're dealing in Europe, you can't deal in USD. You will have to buy or sell only in Euro currency. Okay, let me follow the same calendar. Okay, let me follow the same chart of account. No one bothers. See, government is not bothered what chart of account you follow. Whether you have 1,000 as account for account code for rent or whether you have 10,000 as account code of rent for rent, government is not bothered. But the government is bothered about the method in which you represent your accounts. Okay, let's say in Europe they want international financial reporting standards. They don't want US GAAP. Okay, this Europe government, the European Union government, they don't want you to project or to represent your accounting transaction in US GAAP, but they are very strict and they want it in IFRS. Because you are having an operation in Europe, you are supposed to report it to the local government in IFRS. Now, in this case, the difference is not only on account of currency, but on account of convention. So, whenever there's a difference on account of any of these three C's other than currency, okay, currency can be included, but if it is a difference in calendar or chart of account or convention, then you will have to create a secondary ledger. In short, as a thumb rule, secondary ledger is any C differing, or I can put it as anything other than above. See, as long as the difference is only, see this only is very important. As long as the difference is only on account of currency, then I can have a reporting currency. If the difference is on account of anything else, that is anything other than currency or anything other than currency plus something, in that case I will have to go for a secondary ledger. I can't manage with my reporting currency. Clear regarding this one? You can take the thumb rule if you don't understand the concept, or else understand the concept. So it's very simple.
Satya,
Yeah, Jay.
Satya, I have a doubt here.
Yeah, please.
Okay. Now, Europe requires, let's say, the IFRS convention.
Correct.
Okay. Now, I've seen that normally you'll have two kind of balance sheets when you prepare it, right? One as per IFRS and one as per US generally accepted JAP.
Correct.
Now, so this is meant to,
That
this
is
IFRS
why-
is meant for reporting to European authorities, whereas we generally, it's mapped into the US company as GAAP, so we have to prepare two balance sheets there, right?
Yes. See, now what we will do is, since the Europe government requires, see, in this case, there is no restriction on the Indian government. It is allowing you to follow US GAAP, okay? That is our assumption.
Right.
Here, the Europe government wants it in IFRS. Now, when we say the Europe government wants it in IFRS, then the Europe government wants a balance sheet in IFRS. Correct?
Right.
So, you will prepare two balance sheets. One will be given to Europe government, which will be as per IFRS. One balance sheet will be as per US GAAP. So, the balance sheet in US GAAP will be prepared in primary ledger. The balance sheet in IFRS will be prepared in secondary ledger.
Oh, okay. Okay.
So, to cater to different requirements, we have a secondary ledger.
Right.
Okay. Satya, suppose for the Europe, if currency is still USD and if there is only change in convention, then also we need to create secondary ledger, no? Anything other than currency?
Okay, wait. Now here, I want you all to answer. Now that will clarify whether you are understood or not. Now, this is my legal entity. Okay? Primary ledger. Tell me, what will I have for India?
We need to create only reporting currency.
Reporting currency.
Prior,
Okay. What about France?
Secondary ledger.
again, secondary ledger.
Secondary ledger.
Now what about USA?
The same thing, secondary ledger.
Why? Gap, right? It is same
Because
gap.
calendar,
Yes,
you know what, but the calendar is changing in there, right? Accounting 9.
correct. So whenever any of the other C's, if there is a change in any of the other C's, you'll have to go in for secondary ledger. Now, what? See, after this was your question, right? See,
Yeah.
your question was USD is the same, but there is change in some other C. Then you will
Yes.
still go for secondary ledger. Now, what about the fourth one?
Okay.
Same thing, secondary ledger, right?
Currency is only changing. No, yeah, secondary ledger. Yes.
Secondary ledger.
Okay. So now, to summarize our understanding, let's go to the slide here. Primary ledger is the main record keeping ledger. It is defined by the 4 C's of accounting. Okay. It has a primary currency and it has a ledger accounting method. Now, what about the secondary ledger? Secondary ledger can differ in any one or all of the 4 C's. Got it? So it can differ either in chart of account, accounting calendar, make currency or subledger. So it can differ in one or all. Why it is one or all? Because if it is currency, then it is more than one. If it is on account of anything else, then it is one. Okay. Now reporting currency differs only in currency. Got it? And another way of representing this one. Okay? If difference is only on account of currency, use reporting currency. If one or more are different, then use a secondary ledger. That is what we saw here. Clear so far? Can we proceed further? Now we are going to some concepts on accounting configuration. So, is it overloaded, or do you want to continue tomorrow, or can we continue now?
Satya, single question. Mine here.
Yeah, please, Mani, go ahead.
The final benefit of secondary ledger is it is useful in consolidation. Like if the Dell company wants global financial statements, that's what I understood. Because if in real time they use primary ledger and secondary ledger for consolidation.
See, it is like this. Let me.
I understand the concept, but in the what?
See, when is a consolidation used? You should understand when is a consolidation first used. A consolidation is used whenever there is a holding company. When we say holding company, it means a company which owns more than 51% of the share capital in some other company. Okay, so that is a holding company. So whenever that's holding company, and this holding company has more than one subsidiaries. Let's say I have subsidiary 1. Okay, I have subsidiary 2. Okay, so one or more subsidiaries. So what we'll do, we will add up all the consolidated resources and we'll present it at a holding company level. Okay, so this is called as consolidation. This is one scenario. What is the other scenario wherein you want to have a consolidation? See, in this case, you should understand that, see, we are not trying to consolidate. We are just trying to represent the same information in a different format. Okay, now this might be slightly confusing for others because we are going slightly a step advanced, but still, let's get this doubt clarified. Let me say the sale here. Let's check this scenario in India. The sale that has taken place is for 40,000 INR. Okay, it is for 40,000 INR. Now, the same 40,000 INR will be represented in my primary ledger as 1000 USD, correct?
Yes.
See, whether Dell India sells or Dell Europe sells or Dell Canada or Japan sells, ultimately that is getting represented in my primary ledger.
Okay, yeah.
So when automatically using the conversion it is getting represented in my primary ledger, why do we need to consolidate here?
Okay, I got you.
See, they are not two different companies. They are the same company.
Yeah.
Okay. Whether I sell my product in USA or Japan or Canada, ultimately that sale is getting recognized in my books. Only thing is, in one book it is recognized in INR, in another book it is recognized in USD. That's all. Any case,
Yeah.
I'll prepare my balance sheet from here only. This is my group balance sheet. I'll prepare it at USA only because it is a US company. I want to file my returns in USA, so I'll prepare it in United States of America. So when I prepare here, already this $1,000 is recognized in my revenue. Got it?
Got it.
Afsar, did you get the question and the how the logic works?
Yeah, that's
see,
fine.
what Mahen was telling is, see, I have holding company, okay, and I have two subsidiaries. Let's say holding company Reliance, it's having more than 51% of share capital in some, let's say it is having in Tally, and it is having also a share capital in hypothetically let's assume Oracle. Okay, so these are two different companies. Okay, but Reliance is a holding company. So whenever there are transactions, these two, they have to be consolidated and they have to represent in the holding company level. So that is what he was telling. So do we have to consolidate? But here there is nothing to consolidate because see, whenever a sale takes place, it is automatically getting represented in my primary ledger. So I will not consolidate. I will simply take up the balance and I will report it. That's all. Okay. Ultimately, there is only one transaction for one company. for the company total sales for the year, what it will say? It will say, it will, if want, it can further bifurcate based on region, from India, from Europe. That is up to the organization. But the total will always remain the same. It won't further add and increase the total. Okay? To give you
Yeah, I
yeah,
have another doubt.
yeah, Jay.
Suppose let's assume the Dell India is a joint venture company with a shareholding of 40%. The other 60% is held by, let's say, Reliance. What happens in this scenario?
See, we are here, this is called as a shared setup wherein we are creating a single primary ledger and we are having separate reporting currencies. In your case, what is, you will have to go for an exclusive configuration wherein you have to have separate ledgers. You cannot manage with.
Oh, we'll come for that later on, isn't it? We'll come for that later on.
We'll come for the different configurations. We have the subsequent slides for that.
Okay.
Because right now we are in a very premature stage to discuss that joint venture and all these things. Okay. So currently, currently what will happen is, see here it will say total sales. Total sales will be $1 lakh. Out of this $1 lakh, if you say from USA, it can be for 20,000. From India, you will say, let's say 30,000. This is all in US dollars. Corresponding Indian value will be represented here. Indian value converted and from Europe. So for Dell, as a total level, it is sale of 1 lakh. Okay, that is all.
Okay.
We are just splitting the information, but strictly speaking, is not required. If you go to the balance, you will always find the sale as 1 lakh. Okay.
Okay.
Jana, yeah, you had some question. How about Euro?
No, I got it. Thank you.
Okay. Now, accounting configuration. It is what is accounting configuration? In any implementation, based on the, you will have to configure. See, this is not a hard and fast rule to have a primary ledger, to have a reporting ledger, secondary. It's all based on the client's requirement. In different implementations, it has to be configured in different manners. Now, what are the accounting configurations which are available in Oracle applications, which are possible to configure? So we look at those things. Okay. Now all the accounting configuration are done through accounting setup manager. Okay. Now, based on business requirement, we can have 3 types of accounting configurations. Okay. One is called as a shared accounting configuration. The other one is called as an exclusive accounting configuration. The third is other accounting configuration. Okay. This is very, very rarely used. Shared and exclusive are most commonly used. We'll go to what is shared, what is exclusive. Shared is when multiple companies share the same ledger. Exclusive is multiple companies share different ledger, use different ledger. When other is you have a ledger without a legal entity. It's a very, very hypothetical situation, but Oracle has given you a facility to create it that way also. Okay. Now, let us take one by one. Let us go to shared.
Satya, what is, what is third one, please? Third one, other accounting.
Okay, this is
third one.
Other accounting is, see, generally, if you go to accounting setup manager, here, okay, if you go to an accounting setup manager, you will have to setup accounting setup manager, accounting setup. Okay, here, what are the first step? You will first go to legal entity. Okay, create a legal entity. Then you will come to accounting setups and you will go to create accounting setups. You will add your legal entity. Then you will click on next, correct? Accept?
Yeah. Yeah.
But Oracle has provided a facility whereby without a legal entity I can create a ledger. I'll go to next. See, here I will enter the 4 C's. Let's say no LEPL. Operations accounting flex, accounting calendar is. Let's say accounting month. Currency is USD. Standard approved. Click on next. I click on finish. You see this, no PL has been created. You see, you created a ledger which is not having a legal entity. Here you are not able to find a legal entity. See, no legal entity has been assigned, correct?
Yeah.
So this is a very unique or very rarely used case wherein Oracle provides a special purpose ledger. So these are called a special purpose ledger. Let me remove this one. Let me make it as special purpose ledger without LE. Very rarely used scenario wherein actually there was some requirement of a customer. I think SAP was allowing this functionality, Oracle was not allowing, so they created this requirement. Okay, so they have a facility wherein without a legal entity also you can go ahead with a ledger. That is called as a special purpose ledger. That is called as other accounting configuration. Okay, the first one was shared, the second is exclusive, the third is other accounting configuration. You got it? So these are the 3 accounting configurations. Now, in each of this accounting configuration, the level at which LEs and the ledger is, they keep changing. Now, what do I mean by level? Let me again go back to my Excel. See, you remember the reason why I took new org creation before coming to general ledgers, it will give you a heads up as to how the org is created. So if you have understood clearly, you remember we created a business group, then we created a legal entity, then for this legal entity we created a ledger, okay, then we created an OU. This was the hierarchy in which we went about creating a new organization. For the time being, let me remove OU out of the picture. In ledger we don't need OU because it is not 11i, it is R12. Okay, let me remove OU from my picture. So this is the hierarchy, BGLE ledger. Now LE is above ledger, correct? Legal entity is above ledger in this case. This is a simple configuration. This is called as an exclusive configuration, because exclusively for one legal entity you are having a ledger. Now it might so happen that one ledger is used by multiple legal entities. See, this ledger is used by LE1, it is used by LE2, used by LE3. In this scenario, ledger is above legal entity. This is called a shared configuration. Exclusive configuration, the legal entity is above ledger, and in case of shared configuration, the ledger is above legal entity. That is what I have mentioned here. Okay, see, multiple companies share the same ledger. Here, are you able to see this? Are you able to relate it to what I did here? Multiple companies, say Reliance Petrochemical, Reliance Infocom, okay, Reliance IT, they share the same ledger, Reliance ledger, Reliance primary ledger. Okay, now coming to this one.
Yeah, I have a question. In the Excel sheet, we have seen Dell example, no? Dell in India, Dell in Europe.
Correct.
Dell corresponds to which one here?
You tell me.
Here we have primary ledger and secondary ledger.
Always
ledger.
refer to primary ledger. Don't refer to secondary ledger. The secondary ledger or reporting currency ledger is only another way of representing the transaction. Okay, your focus and your relationship should always be to the primary ledger, because that is what representing the true picture of the organization. The other ledgers are created only for reporting purpose or for statutory compliance purposes. But from an organization perspective, the profit or loss is always from a primary ledger.
Okay, if that's the case, then it's a shared.
Why?
Because
correct. India and Europe are sharing the same information.
Yeah.
Correct?
Yeah. If we look that way, then it's a shade. But ultimately, we have only one ledger, no? So, if you look at primary ledger, it's only one ledger we have, no?
Yes. See. Okay. If we take our Dell example here, there is one company, Dell USA. What you said is correct. There is one company, Dell USA, which has one ledger, primary ledger, and these are just mere operating units across the globe. They don't have a separate representation of themselves. Okay, they just take the primary ledger data and they make changes to either currency or to convention or any other C. So, in a shared configuration, you will have different companies sharing the same ledger. Let's say I have 4 C's. Okay, now let me take you one other example. I have Dell and I have Lenovo. Okay, I have Dell and I have Lenovo. Now, if these 4 C's are used by Dell and Lenovo together, okay. See, Dell is also using USD, January, December, US chart of accounts, US GAAP. No one prohibits Lenovo from using the USD, Jan to December, US chart of accounts and this one. So now, in this case, this ledger is being used by 2 legal entities. Got it? Within one ledger, you have Dell USA, you have Dell Lenovo. So now, what is this configuration? Ledger is above a legal entity. So this ledger is being shared by 2 legal entities. Okay. So it all depends on how you configure your legal entity. Here, are you configuring India as a legal entity and are you configuring Europe as a legal entity? It depends. If you do not configure them as a legal entity, then it will be an exclusive configuration. If they are classified as a legal entity, then it will be a shared configuration. Got it?
Okay, fine.
See, here there are 2 legal entities, Dell and Lenovo. They all share the 4 C's. So nothing stops me. See, what I will do, I will come to add legal entity. I will add a Dell and I will add a Lenovo. Got it? No one stops me, right? So, if the ledger is at a higher level, then it will be a shared configuration. Now, let's go to a bit of detail. See, why should multiple companies share the same ledger? Country in which companies operate do not have strict requirements as to chart of accounts for legal entity. You do not need to open or close periods independently between ledgers and company. Okay. Multiple LEs can maintain the same accounting representation. Dell, Lenovo can maintain the same representation, such as corporate and statutory requirement. Multiple legal entities can share the same chart of accounts, calendar, currency, and slab. Shared accounting configuration is the only solution for the above business requirement. Got it? So these are the reasons why multiple companies share the same ledger. These are business requirements. Now let me go to this. Yeah. Any doubts? Yeah, anyone? We'll come to what balancing segment value is and all to represent each LE. We'll come to that a bit later. But currently understand what is a shared configuration. Okay. Now, this is a shared configuration. You can see for Vision operation, okay, you have one ledger, Vision operation USA ledger, within which you'll have n number of legal entities. Okay, so now the ledger is above legal entity. Okay, this is an exclusive configuration. One second, I'll show you the shared configuration, shared setup. You have Satya Enterprise, it is having a US ledger. Okay, it is having a legal entity USA and it is having legal entity in Canada. So both of them share the same ledger. In this case, it is a shared setup, but here it is having two legal entities. The same Satya Enterprise is having a UK company and a French company. But for UK company, I have a GBP ledger, and for French company, I have Euro ledger. So this is an exclusive configuration. Got it? Any doubts so far? Ajay? Armstrong? Oh, Armstrong. What about Afsar? Jana, Mahen?
It's fine.
Okay. So
I'm
what?
good, Satya.
Yeah, please go ahead.
No, I'm good.
Oh, okay, fine. Okay. So what we will do is we will stop for this today, because if you complicate further, then it will be creating problem as to BSV. So we'll stop for it today. Then tomorrow we'll continue with this one. Okay.
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 Satya,
Yeah. Please go ahead.
did we have a class yesterday?
Yesterday
Uh-huh.
Yesterday we had a class, right? No, we did not have a class yesterday, right? We did not have a class.
Yeah, that's why I was confused because we had a day for yesterday.
Yeah,
That's
because
it.
like there was some what to say request for creation of this new work, so we took an off yesterday. So we'll have it tomorrow. We'll not have it on Monday. Okay.
Okay. Okay.
Okay, fine. Mahen. Okay, Mahen, if you can ping me your email ID, I will send you the invite and everything to your email ID directly. Okay.